Time for a little myth busting. This is my favorite part, where we debunk some common misconceptions about ETF investing. Today we're looking at whether cheap ETFs are the best ETFs. It sure sounds that way. We keep talking about it. For low price levels, factors like commission spreads, tax consequences, and even securities lending policies, however, can end up having a bigger cost impact than expense ratios. Can we make an argument? We constantly put up the cheapest ETFs because that's where people are going. That's where the money is flowing. Is that invariably, though, the best thing to do if you want a plain vanilla ETF?
If you're looking at just the biggest buckets of the asset classes, often that will be the case, the cheapest the way to go, but nothing is more important than what's under the hood. I mean, that's a common theme here on this show, knowing what you own. The reason you want to know what you own is sometimes it's stuff you don't plan on. So there's no point in owning a 5 basis point ETF if it's not what you actually expect, it's not what's written on the tin. So yes, expense ratio, all else equal, is always good, but all else is rarely equal.
Yeah, of course, we talked about before, commissions, spreads, tax consequences can matter as well.
I always tell everybody, look at the after-fee performance. That's all that matters. I own some very expensive ETFs that are very sectoral or very eclectic. I don't mind paying the fees as long as I get the performance and it's doing what it's supposed to do. I don't own any market cap weighted ETFs. That I'll never do because I don't get diversification out of that. And everybody's learning their lesson today on the SMH. That's a painful reminder. If you own a stock that's over 10% weighted, you get killed.
But it's not so bad like in the middle of 2018 when NVIDIA was a dominant factor and that ETF outperformed. I put it up every morning saying, here's the outperformance.
Market cap weighting in a broad bull market is always going to do very well because you're doubling down on your winners. But that strategy only works so long.
Right, so be careful in a down market.
Yeah, at some point you have to sell some of those winners and fund some of the
laggards. Because they're momentum stocks. You get the momentum guys coming out of it.
It's a great debate, and you're going to see it at the ETF conference. It's the #1 debate, market cap weighted versus equal weighted.
Yeah.